Part 1. Introduction. Welcome back to Debt-Free Dreams, where we empower you with the tools and knowledge to master cryptocurrency and achieve financial freedom. In today's video, we're diving into one of the most powerful skills for any crypto trader: how to use technical analysis to offer crypto trading. Technical analysis isn't just for stock traders, it's a must-have skill for crypto enthusiasts who want to understand price trends, predict market movements, and make more informed trading decisions. By the end of this video, you'll learn the key concepts of technical analysis, practical tools to use, and how to implement it in your crypto trading strategy. Don't forget to check in the description below for links to helpful tools and other in-depth useful videos. Make sure to hit that like button, subscribe, and turn on notifications so you never miss these valuable insights. Let's jump in. Part 2. What is technical analysis? Let's start with the basics. Technical analysis is the study of price charts, patterns, and market indicators to forecast future price movements. Unlike fundamental analysis, which focuses on a crypto's intrinsic value, it relies on past price action and market data. The goal: to identify trends, key price levels, and potential entry or exit points. Whether you're a day trader, swing trader, or long-term hodler, technical analysis is an essential part of any strategy. Part 3. Essential tools for technical analysis. To get started with technical analysis, you'll need the right tools. Here are some of the best ones. TradingView, a powerful charting platform that offers advanced technical indicators, customizable charts, and tools to analyze price action across multiple timeframes. Use this to access key indicators like RSI, MACD, and Fibonacci retracements. CoinStats helps you track your crypto portfolio and trading performance in real time, making it easy to integrate your trades with your analysis. Glassnode offers on-chain metrics to complement your technical analysis with blockchain-level data like wallet activity and transaction trends. 3Commas, a trading bot and portfolio manager that allows you to automate your trades based on technical analysis strategies. Links to these tools are in the description below. Part 4. Key concepts and indicators for technical analysis. Let's explore some essential concepts and indicators we'll use in technical analysis. 1. Support and resistance levels. Support: a price level where an asset tends to stop falling and bounce back up. Resistance: a price level where an asset tends to stop rising and pull back. Use these levels to identify buying and selling opportunities. 2. Candlestick patterns. Candlestick charts are a visual way to interpret price movements over a specific time frame. Learn to recognize patterns like dojis, hammer candles, and engulfing patterns to predict market direction. 3. Moving averages. Moving averages smooth out price data to identify the overall trend. The 50-day EMA and 200-day EMA are popular indicators for spotting bullish or bearish trends. 4. Relative Strength Index (RSI). RSI measures the speed and change of price movements, helping you determine whether an asset is overbought or oversold. A reading above 70 indicates overbought conditions, while below 30 signals oversold. 5. Moving Average Convergence Divergence. Moving Average Convergence Divergence is a trend-following momentum indicator that shows the relationship between two moving averages. Use it to spot bullish or bearish crossovers. 6. Fibonacci retracement levels. Fibonacci retracement levels are horizontal lines indicating potential support or resistance levels based on Fibonacci ratios 23.6%, 38.2%, 61.8%. These levels help traders identify where price corrections are likely to reverse. Part 5. Step-by-step guide to applying technical analysis in crypto trading. Here's a simple process to follow. Step 1. Choose a cryptocurrency. Decide which crypto asset you want to analyze, whether it's Bitcoin, Ethereum, or a smaller altcoin. Step 2. Open a chart on TradingView. Select your preferred time frame, such as 1 hour, 4 hour, or daily. Longer time frames are ideal for identifying overall trends, while shorter ones are better for quick trades. Step 3. Add key indicators. Overlay indicators like RSI, moving average convergence divergence, or Bollinger Bands on your chart. These will give you insights into market momentum, volatility, and trend direction. Step 4. Identify trends and patterns. Look for patterns such as ascending triangles, double tops, or head and shoulders formations. These patterns can signal potential price movements. Step 5. Draw support and resistance levels. Mark key price levels on your chart where the price has previously reversed or consolidated. Step 6. Create a trading plan. Decide your entry and exit points based on your analysis. Set stop loss and take profit levels to manage your risk. Part 6. 3 common mistakes to avoid. 1. Ignoring risk management. Never invest more than you can afford to lose, and always use stop-loss orders. 2. Overloading your chart. Too many indicators can cause confusion. Stick to a few key ones. 3. Chasing the market. Be patient and wait for confirmation before entering trades. Part 7. Combining technical analysis with other strategies. For the best results, combine technical analysis with on-chain analysis. Use tools like Glassnode to analyze blockchain data. Fundamental analysis. Understand the project, team, and market sentiment. Technical analysis is a powerful tool, but it's not foolproof. Combine it with a disciplined trading strategy and proper risk management to improve your success rate. If you found this video helpful, don't forget to check in the description below for links to helpful tools and other in-depth useful videos. Please like, share, and subscribe to Debt-Free Dreams. Let me know in the comments what's your favorite technical indicator, and how has it helped you trade. Thanks for watching.